16th episode of WTW, the weekly trading wrap up, where we talk about the weekend markets from a trader's perspective, what to focus on and what to ignore. So let's begin. Well, action packed week, to say the least. Okay. As usual, we're going to start with the chart of the S&P 500. The arrow denotes Monday, Tuesday, Wednesday, Thursday, Friday. Okay, devastating week. We're gonna talk about the entire week in one shot now. Okay, we're gonna handle it a little bit differently today. But first, let's talk about the technical picture. Okay, I feel we should go over the technical picture because there's been a lot of fear and a lot of selling and a lot of margin calls that have been going on this week. Okay. As you can see, we started out at 595 and we on Monday and we went as low as 565-ish. Okay. That's a drop of almost 5% for an entire week. That's huge. Okay, that's a lot of, and it's done on a high volume. If you look at the volume for this week, it's much higher than the average, let's say, of the previous weeks. Okay, so this is telling you, technically speaking, that a lot of selling was happening. Margin calls, people having to sell because they hit stops, momentum traders chasing it, etc., etc. Okay, so this was a huge sell-off week. Okay, but the technicals, if you look at it carefully, you see we still have a series of higher highs and higher lows that was violated this week. Okay, this major higher low was violated this week. Okay, and it's slightly recaptured. It's retesting it on Friday, but it's still a very devastating week technically. Okay, it doesn't mean the bullish trend is over. It just means that we could be consolidating here before the next move up, which is what I think happens. Because you don't just have to look at the technicals here. You also have to look at the sentiment. And as we saw, I like to use the fear and greed index. We're at 21 on Friday, but the whole week we were around 17, 18. Okay, no relief, constant selling. If you're looking at the intraday charts here, intraday charts for the whole week, look at the 15-minute chart. Okay, for the whole week, everything that was rebounding was sold quickly. Look at that, bang, bang, quickly. It took forever to go up. This is a 15-minute chart, by the way, okay? That's Monday, that's Friday. Each candle is 15 minutes. So we took forever here. We took from this is on a Tuesday. We went from 11:30 to 3:15-ish up, and then in the last half hour, destroyed everything. Struggled to get up, boom, destruction. Same story here. Struggled to get up, boom. Here we got up, but the week ended. I don't know what's going to happen next week. Okay, so let's go back to the daily chart. Okay, so just because this broke, it doesn't mean that we're done, because as you can see, this wicked move on August 5th broke the series of higher lows and higher highs before, but the bull trend still continued because this major bottom didn't break. So we came on Friday right at this level, the 565-ish level. It's a big level, okay, and it bounced right back. And what's even more important is I'll put on some moving averages here, okay. The most important one here is this deep blue average. It's the 200-day moving average. As you can see, we broke it and then recaptured it. We're above the 200-day moving average, okay. So that's, technically speaking, that's a huge plus that we managed to save it in the last Friday, in the last day of the week, thanks to Powell saying that the economy is strong, okay. So you had massive fear here. AAII last week was huge at 60. That was a record, I think. And we're still at 57. We're still at extremely bearish sentiment. Okay, as you can see, we were always at high bearish sentiment and very low bullish sentiment in the AAII Investor Sentiment Survey. But we've said before, sentiment is not a timing indicator. It has to be used in conjunction with other things. Because look, for 4 weeks, we were negative, and the market still went down. Okay, still went down. The past 2 weeks is down, I don't know, 7, 8%? 5% from peak to trough of the week. That's a big move, okay? However, like if you look at the, because we are such in extreme levels of fear and sentiment and sell-off and volume, a capitulation type moves, um, any slight piece of positive news will rip this market high. We could go up 5% in 1 week, the next week or the week after. Don't be surprised, okay? Because this is like a beach ball being held underwater. It's going to just rip up when even a slight change to the narrative happens, okay? So I'm still bullish, but obviously I got in way too early. I was in at 594-ish level here because I thought after this candle here, after the reclaim from the bad week before, that we were going to go higher, but Monday came and destroyed everything. The sellers still had to sell, okay? Probably from accumulating up here, okay? So that's the technical aspect of what happened this week. There was a couple of macro points that we should pay attention to because even though the technicals sucked, okay, the macro picture was actually pretty good. Okay, we got the ISM manufacturing PMIs that came in. They came in again at 50.3. Manufacturing, like 10 years. If you see, the manufacturing was forever. Like since 2022, it was below 50, which means contraction. And now, for the past 2 months, it's been above 50. It didn't just go 50 past month in January and then fall. We're holding. Manufacturing is holding well. That's a positive. And if you recall, for our macro thesis, which is the macro backdrop, one of our criteria is the ISM manufacturing PMI and the services PMI. Okay, that's neither here nor there, but just to let you know that it's part of our overall macro picture. The ISM manufacturing is positive. Great. What else came out? The ISM services came out on Wednesday, which is right here. Services above 53, above 50 again, still holding above the 50 level. So services are doing well. We have manufacturing doing well, which is great because that was a perennial loser. And we still have services, which is like a bigger part of the economy, doing great again. So 2 check marks there. What else? As usual, we have the initial claims, initial jobless claims. Last week was a little bit worrisome at 242,000, dropped back down to 221,000 within a range. Nothing to worry about, very positive. It's not accelerating to the upside, which would signal recession coming. So that's positive too. And of course, the big news was the non-farm payrolls on Friday. Came in at 151, they're expecting 160, but the fact that jobs aren't tanking is a positive, okay? This, coupled with, that was the big macro of the week, so everything check boxes. Why the panic? I don't understand. Anyways, this is liquidity driven. This is textbook capitulation, margin calls, etc. Okay, this sets the stage with a high volume. It sets the stage for a huge move higher, as we said before. So, what else happened in this week? Europe, the EU announced another 25 basis point cut to their target rate. Now it's at 2.5%. Their target rate is at 2.5%. Ours is at 4.25. So the EU is in trouble. You keep hearing bad news out of the EU. They're going to have a record stimulus. Germany announced a record stimulus. And what's happening to the DAX? This is Monday, Tuesday, Wednesday, Thursday, up on the week. As we were tanking 5, 6, 7%, 5% for the week, the DAX, the German market, is going up. Okay, so despite all the negative news coming out of Europe, you see the main market, the DAX, ripping. Okay, and if you look at it, ever since it broke out to new highs, it's up 41%. Okay, we're not even up that much, and look, it's getting parabolic. Okay, and you would think that the news coming out of Europe, it's terrible news. You would think that the main market, the driver, would tank. Nope. On fire because of record stimulus and falling rates, which is what I think is going to happen with the U.S. We're going to have falling rates. Okay. Even the French market was pretty much nothing this week, even though for us it was down. The U.S. was down. So even though the French market, perennial loser, is still approaching its highs. Okay. So what about the U.K.? Oops. UK fell with us, but then rebounded on Friday as well. Still holding its highs. Okay, so the story is that in Europe, record stimulus, the DAX is on fire. They didn't see the same problems that we saw. Okay, because even though their economy is doing bad, the market is different than the economy, and the market loves falling rates. Okay, which is what I think is going to happen with us in SPY. We're having falling rates. Okay, let's look at the U.S. 10-year, which is our benchmark rate. Oops, falling. We're in a range, but for the past week, it's been rebounding a bit, but on a downtrend. Okay, if this continues to drop all the way down to the 4 level, we're at 4.3%, goes down to the 4 level, 3, high threes, even revisits the lows, super bullish for markets. It's going to be like the DAX. Right? So that's it for Europe. What else happened? Let's touch on Bitcoin. Okay. Oops. Bitcoin. Let's get rid of these. I don't like these averages. I like to see things cleanly. Okay. So Bitcoin, as you know, I was bullish here. I got long, broke down very bad, came back on the weekend, and this is Monday. This red arrow here is Monday, Tuesday, Wednesday, Thursday, Friday. So it did come back. It fell today, and it's continued to fall on Friday. But I'm still waiting for it to come back. Okay, if it reclaims this, it's going to be bullish. However, if you bought calls that expire in a couple of weeks, then you better get out at break even if it ever comes back. But if you have something like in April, like I do, I have time for it to come back and kick in. So as I suspect that the market will be going up after this massive move, I suspect Bitcoin to follow. I'm looking for the market to rebound hard. Okay, it's the same with Bitcoin. Even though right now the Bitcoin trade is a loser. Okay, let's look at some commodities. I like copper. I mentioned copper in my Twitter. Look at this chart. Approaching a major level here. Is it overbought? Nope. RSI doing pretty well. Copper is doing very strong. Why is copper up? Because tariffs. The whole story. We're putting tariffs on copper. Commodities are going to go through the roof. And we just saw rates going down. So rates going down with tariffs is good for copper, good for commodities. But the only commodity it's not good for is, which I am bearish on, oil. This is the U.S. oil, the WTI crude oil, at huge support. It seems that, tariffs are not helping oil because he's not really tariffing oil. And Trump is actually the president of drill, baby, drill. So you're going to have more oil supply. Plus, the war in Ukraine and Russia is abating. There might be peace. So he might lift these sanctions on Russian oil. So I'm very bearish oil for reasons other than the tariffs. The tariffs will not affect the price of oil. It's going to go down. Look, series of low. This is like a wedge. What is it? A triangle, I would say. I don't know what the technicians call it, but you have a series of lower highs approaching a key level. Once this breaks, we're going down. The next level is it's at $66, $67. The next level is 42. So nothing but air. 42. But falling oil is good for the economy. Okay. Depends how it falls. If it falls because of demand, because we're in a massive recession and people aren't buying, that's devastating. But if it's just because there's abundance of oil and we're going to have peace in the Middle East, let's say, or peace in the Ukraine-Russia conflict, then this is good for markets. It fits along my thesis that we're going to rebound hard, okay? And remember, we're still in a bull market. Okay? Nothing has really been violated. This important level held. Okay, these others didn't. But now we're consolidating. I expect a huge snapback move. And I'm going to keep mentioning it because that's my point of view. And finally, let's end it on gold. Okay, gold. Throughout this entire time, where's Monday? Look, it rose this week. Okay, gold went up this week as the market tanked. That never happens. Usually, gold goes with the market. People think it's contrary. It goes. Gold is bid when the market is tanking. Yes, in extremes, but generally speaking, if you look, the market and gold go together, okay? So it's a central bank driven story. Plus, gold loves tariffs. I should say, gold loves uncertainty because even though Trump is clear on his tariffs, he keeps putting them on, putting them off, putting them on, putting them off, threatening here, Canada, Mexico, do what I want. Okay, if you do, then I'm going to put them back on in April. Or if you do what I want by April, we're going to put them back on by the summer. It's just the uncertainty is what's killing everything. So that's people are flocking to gold. Okay, but what needs to be mentioned here is the gold miners, GDX. Okay, if you look at it carefully here, this to me looks like a cup and handle. Okay, here's your cup and your handle here, and it's about to break this level here. The pivot would be 42.62 on the GDX. Okay, and I'm starting to see the miners, like anecdotally and for the past week, I'm starting to see the miners outperform the metal, okay? The way to look at that is you look at GDX divided by GLD, which is GDX over the metal. And if you can see, it's been outperforming. It's generally a lagger. Usually this means, the fact that it's down means that gold has been outperforming the metal this entire time since 2022, okay? Which is this spike here. This going down means that the miners are getting killed versus the metal. I would love to see this ratio climb back up to these levels here. Okay, that would show that people are starting to jump back into the gold space, but not just the gold space in terms of the metal, but they're starting to buy the miners. And to me, like the big miners, one of my favorite is AEM. I still have this stock. Okay, look at it. Look at Agnico Eagle, completely bucking the trend. High tide flag, didn't do anything when the market was tanking, at highs. The majors are printing money. Okay, the major gold miners are printing money. They have the highest free cash flow yield of any industry right now. I'm shocked that portfolio managers aren't putting money into this space. Just a little bit of money into this small space will send it ripping. Okay, they're making money and their balance sheets are pristine. It's not like it was back in the day. Their managements have learned. They are doing exactly what the shareholders want. The only thing missing, a little criticism, is that I would love for them to start taking over small companies, like consolidating their space, or like putting in a normal course issuer bid or something, like buying back their shares. Act as if they're like a major tech company. Start buying back your shares. Start doing all that stuff. Show that you have confidence in your company. Okay, that's the only little critique that I have. But apart from that, printing money, and it takes time for that's GDX, but the GDXJ, which is the junior gold miners, same pattern. Okay, it'll break out. They're both losers. Okay. Let's get rid of this. I don't care about this line anymore. Perennial losers. It's the same chart as GDX, which is the majors. But I'm expecting the juniors to rip right after the majors. Okay, we need to have excitement back in this space. Okay? We need to have excitement back into the miners, because the metal at this point, $200 and $2,900 gold, when their all-in sustaining costs are like $1,500, $1,800, $2,000. They're just printing money, and it's obvious. I like AEM, Agnico Eagle. That's my favorite. That's my favorite major, and I have a couple of juniors. So that's it for my outlook of this week. It's been devastating, but I'm expecting a rally to happen soon, and it could be vicious, it could be fast. But let's wait and see. That's it for this week, and looking forward to next week. Take care.